Hello and welcome to another trading update on gold, courtesy of WeMakeMints.com. I'm one of the WeMakeMints.com traders. Right, we done a video last week about gold, saying that basically the bull market was well and truly over, and we was now in a bear market. We expect gold to crash and burn in the ditch, but yeah, we've basically done a video. We do chart of the week every week on our website, and basically what we decided to do this week is instead of uploading a chart, we'll upload a video. There's lots of technical reasons why we think gold is going down next week, and when you see this video, you'll see just how much we believe it will go down. It had a long-term trend line. It was bouncing off. It broke that trend line, tried to get back above it just here. It actually spent a few weeks trying to get above it, and then we broke down. If we zoom in, you can see how long it was really trying to get above that trend line again. This average here we talked about last week held for a little while, and then it just fell off the face of the earth, really. And that's what we expect will happen on gold. Maybe not as quick, but this trend line here was holding. On the third touch, it closed just on it, and then we failed to get above it once we was below it. There's quite a few technical things we need to go into on this, but let's go. Right, so we had the big down move. We found a level of support here, and we bounced up, failed to get. That's where we actually went short. But anyway, we failed to get back above it, and we bounced off a previous low, which everyone was sort of saying, "Oh, this is a double bottom" and all this, but we didn't think it was a double bottom. It's quite normal in a bear market to get a bounce off of a previous low, which we've got, and then we anticipate that low will get taken out. Gold will make a lower low, and we believe it will be this week coming. We've formed a pretty much a textbook bear flag. We'll go into that in a bit more detail, but this is where we just want to show you a little bit clearer where we think gold is going. When you look in a bull market, look for areas of strong resistance, and that should be your strong support in a bear market when the price comes back down, and that's where we're pretty much looking at the 1280 area, around that, because that's where it's quite a strong support on the way up. Long term, we're looking at $1,000 in gold, because that was a very hard level to break on the way up. It should be quite a hard level to break on the way down, so that will be quite a strong support. That is actually what we're recommending to our clients on We Make Mints to actually expect. So we're actually expecting a long-term price target of $1,000 on gold, but just zoomed in, we expect gold to go lower this week, and this is the reason why this has formed a beautiful bear flag. If you look at this support line as well, we're bouncing off that support. On Friday, we tanked. We closed below it. You may get a back test of it on sort of Monday. If you do, ideal time to go short. There's a good chance we won't actually get a retest of this trend line now. It may happen. We can't exclude it. But now we've finished below. That is it's a beautiful signal to go short. This is where we're anticipating. When we was first doing our analysis, we worked at this area. The computer program we use actually drawn in that green line on the 129-ish, 90-ish level. That is where we're expecting the next bounce in gold. So that is where we are shorting down to. We are recommending to our clients that we actually maybe take a bit of profit there and resell a next rally. But we are expecting $1,000 in gold long term. It will take a couple of months. But this is a beautiful bear flag, and this is something that you need to be going short. And we are actually already short on gold. And we was actually short on gold within that bear flag because we was just so convinced this is going down. This is, as we say, you can see from this this angle of the chart, where's going to be the strong support, and we think $1,000 is going to get hit at one stage. Which is, you're looking at near enough a 400-point drop on gold, or $400 off, and that's what the We Make Mints team are saying. It will probably happen this year. By the end of the year, we'll probably hit $1,000. A lot of people are saying about, well, gold's got to go higher because they're printing money and it's devaluing the dollar, etc., etc. Well, we've got an answer for that. There is a fundamental reason as to why gold went up so high, but the price, if you actually look at the chart, the price went up so quick, it actually wasn't in sync with the fundamentals, if you understand what we're talking about there. Gold shot up too quick and wasn't justified by the fundamentals. Any market that goes up that quick cannot be sustained. It cannot be sustained. And the economy is getting better now. This was the bar on Friday, and the US job data came out and was quite positive. You're starting to get some quite good fundamental news. Um, the reason why the gold market and the bond market done so well was that it was a flight to quality. When the stock market's looking very dodgy, people go to quality like bonds and gold. That money is now leaving gold because there is no, the economies around the world are actually slowly recovering now. And as we said, this actually shows you the perspective of the drop that we are saying is going to happen in gold. 400 points. That green line at the bottom of your screen, that is where we're expecting it. Look how much of a drop that is. That we are looking at going short on maybe, you know, anything between 50 and 100 contracts. Even if you went short on 50 contracts, you're looking at a good 10 grand profit at least. The price cannot be sustained. In the 70s here, you had a quite a quick shoot up. Gold done nothing for a while, and this was just you know, this is a bubble. This price cannot be sustained, and markets normally fall a lot quicker than they rise. Whether we'll ever get back down to the $300, I don't know. We're not going to go into that, but at the moment, as a long-term trade, we're looking at $1,000, but it is long. So we touched on this in our last video as well on WeMakeMints.com. If you click on Chart of the Week, we upload every week. Our traders will get together and we'll look through loads of charts and we'll post the best ones for our followers. These are the sorts of charts that we post. On our forums, we talk through strategies, and if something goes wrong with a trade, then we put updates on our forum, basically telling people what to do if it goes wrong. But we've been going on about going short on gold, long on AIM stocks, because that's quite undervalued. AIM has taken a right kick in. The AIM is the alternate investment market for small companies. But anyway, if you click on articles on our page, there's articles such as gold, the fundamental reasons why gold shot up and why it's likely to go down. Also, what caused the credit crunch. We'll be adding articles as and when, but yeah, there's lots on our, if anyone who's interested in trading, there's lots on our website. So come on down, WeMakeMints.com.